Okay. So what I want to do today is we're going to take actual trades, but I want to like explain the entire process to you guys that I think works well. So in order to do that, if you have a question, feel free to open up your mic. I am not going to read text messages. So, so please don't type a message, just open your mic and speak. Because, at times things might move faster. But I just want to like explain the whole process, how to get started, what to focus at. And basically, until you're a consistent trader, you should not be trading the open because the open is just too fast and there's just too many traps. So consider waiting for decent direction. Now, in terms of rules, I always it's always about levels. Okay. So what you want to start off with is you want to look at the morning plan. Okay. So I post these things. So you can see that obviously there's a lot of lines here because we had a lot of action, but we have on the morning plan we have a pivot, and basically the way I look at it is if we're below that pivot, then I'm expecting downward pressure. Okay, so if we cannot get above it, then I won't be looking for longs. Okay, now obviously indicators will tell us when to look for longs, etc., and we'll go through them right now. But this is the first place I start. So I look at this. Let's quickly see if we can. Let's go and copy the Mancini levels there, and then we'll put them. So this is the 50-minute chart. This is the morning plan. I have the levels. I have the pivot, and then arrows. So if we're above the pivot, then there's upward pressure. These lines are places where you could reject. If we go down, this is where, I expect more momentum. And you can see, if you look at this, it's very easy to see. That's where we bounce. So if we get to that point, I expect more momentum going down. So, it's not rocket science. We can easily see where buyers and sellers stepped up, and that's all the morning plan is. It's something all of you can do, but, just trying to save you some time. So then the other chart that I look at is basically this is the 2-minute ES, 2-minute VIX. You can see the VIX is totally spiking here. And again, um, I know it's easy to go and like take a bunch of trades now, and you can do whatever you want, but there's some value in just like spending time to understand the whole process, which obviously is going to take a little bit longer. Um, and more focus. But so I'm just gonna update the Mancini levels. I'm gonna go there. I'm gonna just paste it in there, um, save it, and then because so Mancini levels, you guys know how they work. So he's got a pivot level as well, and so he's got different rules for what he's saying. But so it's good to look at my view and his view, and then you've got levels there, and then we say so we start with so when we have good money flow, this is telling us that the move is down. Okay. We see that the VIX is moving up. And so the first thing is you want to determine if we're in a chop, if the market is in a choppy phase. Okay. So if there's chop, it's best to not take a trade. Okay. And I've updated the software so that this background will change orange when there's market chop. Now, I'm not sure how good that chop detection is going to work. We'll see. But if it says it's choppy and it's not, or vice versa, then obviously we'll tune it over time. But so if you see this turn orange, then consider setting out unless you have a good setup. Okay. So the first thing is if there's chop, no trade. Next thing is we're looking for clear direction. So when I look at this, direction always starts with money flow. If we have strong money flow and we have buying pressure, and then we have the 2 minute triangle aligning, so we have good direction here. Okay. Now, again, in the first half an hour, sometimes you can go down and then you can bounce. So it can be very tricky. So that's why I wouldn't recommend that you trade it. But if you look at this uh, cheat sheet for ES, this card will show you that everything's red. And we've had this for a long time on another page, but I'm quickly going to go through it again. So you can see that we're in a downtrend. You see this down arrow on the 30-minute chart, and we've been in a downtrend on the 30-minute chart for 94 minutes. Okay, so that's going to help you to just get an idea for the direction. The relative volume by time of day is 120%. So this will give you an idea before market, in the morning, early morning, etc. So any point in the day, you can look at this and you can say, okay, we have above average volume for this time of day, 120%. So that means that there's more activity. And sometimes you see, so relative volume on individual stock like Tesla tell you if anyone is interested in playing there or not. So individual stocks, you're not going to want to trade if there's low relative volume. Okay. But when it comes to the indexes and then the futures, um, sometimes you get the better trading when you have lower volume because it's less trappy, and you can have just a slow grind up or a slow grind down, and those are usually easier to trade. Okay, so if your volume is too high, you can actually get a lot of violent moves, up and down, and a lot of traps. So this is an indicator of the volume, and so higher is not better, lower is not worse. And over time, you will get to know it. So, it's above average volume. It's a Friday, so obviously Fridays can be a little bit trappy. This is the current price, and it is below the open, so it's negative. Previous day gain, so it's below the previous day's close. The bias, so this is based on the 48 cloud, so we're below the 48 cloud. We're in downtrend right now. Buying pressure is negative. Buying pressure triangle is negative. Buyer sellers on the 10-minute control alpha zone is negative. So everything, so the ES 2 minutes and 1 minute triangles is down. VIX is biased, so the VIX colors are inverted. Um, so basically everything here says, we're moving down. So if you look at this, the last thing you want to do is take a long. Okay. So this is the first thing you have to understand is that when you're in a downtrend and you see this bounce, you're going to say, okay, maybe it's turning right now. Okay. So I'm going to get a long because it's turning. And it might be, you're at a level here. It looks like you're bouncing. Um, but I would discourage any trades against the trend. Okay. Because it's a lower probability. Now, if you look at this, you see that money flow is disappearing. We're moving up. So this could definitely be a bounce at this level because it's a level that we expect a possible bounce. So this is not a safe place to get into a trade. Okay. And but if you're gonna take anything, I think taking with the VIX this high, a short would be better. So we're just gonna do some practice trades just so you see it. So for practice trades, obviously, so it's saying it's not a good time to buy. So you're going to click on this button to say unlock it. I'm just going to take a quick short here. So when you look at this, so we have two types of stop loss management strategies. The one is based on ticks and the other one is based on time frame. Okay. Now, if you say I'm going to use this one or this one, it will do it. But if you say you're going to take both, then it's going to get you in at it's going to take two trades at a time. Your initial stop loss value, so you're willing to lose 20 ticks now. So if you trade ES, And this is my demo account, so this is fine. So you can see here, so obviously the price is bouncing there because we're at that level, okay? And is why this was not a safe spot to get in, because we expected a bounce here. Even though we have a good downtrend there, it's fading based on the money flow, and we're at this level. Okay, now it could still go down, and that's why, it's very risky to get into a trade at this point. The other thing too is if you're going to get into any trade, um, you want to give it a little bit more room. So if your stop is too tight, you're going to get stopped out, and it may move on without you after you're stopped out. Okay, so it already stopped us out at that price. It didn't give us a lot of time to talk about it, but let's talk about every value here. So the early entry. So if I'm gonna get into longs or short, and I want to get here in basically at the market price, then this is saying if I'm gonna get in long, I'm gonna get in 2 ticks above it if it's a positive number. If it's a negative number, I'm going to get in 2 ticks below it, and then the same for short. So that's your early entry. Timeout, if I'm not filled within so many minutes, then it's going to close the trade. If I have a stop loss, so my stop loss is how many ticks am I willing to lose if the trade doesn't work out. So I added on 220 ticks, which is equivalent to $250. And then if I take 2 trades, that's going to be, times 2 if both of them get stopped out. I'm going to those next to each other. So you can see here, so we're rejected at that level. Okay. But so even though we're probably going to break down because we got in at a market price, we got filled here, stopped out, and now it's moving on without us. So that's why the better way to get in is to get in at the alpha zone. So if you're gonna go in, so if you wanna get in at any time and you wanna make sure you're not overpaying, then you're gonna get in at the alpha zone. Now we are getting in at early at -2. That means that we're getting in late, so we're gonna wait until we're above the bottom of the alpha zone by 2 ticks. At this point, you could decide to chase it, press the C2 button, a couple of times. And don't do it too many times because each time you chase it by 2 ticks, that's equivalent to $25. So that's gonna give you a better fill. So if we use that instead, we probably would not have been stopped out. We would have been filled at the alpha zone and then not stopped out, and we would be in decent profit already. So that's very important. Now, obviously, as I'm trying to show you the interface, we're not trying to make money here. We're just trying to learn the interface. But I would recommend, again, it's not financial advice. You do whatever you want. But the the number one reason for well, there's probably many reasons, but the reasons for losing on trades is because you are chasing a move. And so you see a big candle and you chase it. And those big candles are usually, traps. So if you're going to chase that move, you're going to probably get trapped and then get stopped out.
News. Praise.
And then also the other thing is if you get a bad entry. Okay, so if you get a bad entry because you're using, the market orders instead of getting at the alpha zone, then even when you're right, you're going to get stopped out. And then the other thing is, you know, trading against the trend. So like right now, so we have a good downtrend there. When you look at the money flow, then it is fading. Now we have market moving news coming up. And so this is a good time not to take a trade because, in 14 minutes, you might get, um, a severe move that could stop you out. Okay, so now, so we're in that trade that we took. So let's take a look at a few things. And again, I'm just trying to show the interface right now, and then later we'll take a look at you know, better trade. So right now, if you're in here, you can, if you want to change your stop manually, you can click on the pencil and then you can put in a specific value, change it. If you want to change your stop and say, I want, instead of losing 250, I want to move it to 150. So it will change your stop level so that you risk less. Um, you can also, at the top, there's an up button. So when you do that, it will have your stop. Okay. So you can use that to up your stop at any time. When you get here, you can say, okay, I want to lock in. I want to lock in when I get to this value, and you will see that it changes the take profit immediately to that value. And so you can see how quickly we got locked in there on that price. Well, this one, we might say, okay, so my stop is at my entry, so now I'm at break even. I can say, okay, well, I want to make sure I lock in some, so I'm gonna up this a little bit so that it will stop out at $50 if that gets triggered. So there's many ways to manage your trade, but the most important thing for managing a trade is you want to get to the point where you have some profit locked in on one of them, and then the other one you want to act as a runner. So it's really important that um, you don't move your stop up too much. Otherwise, you know, so you got to give it a lot of breathing room. Otherwise, you know, you get filled at $50 and then it runs up to $1,000 and you miss out on that entire move. But um, and then and we'll show you in the next trade. But basically, when you when you get into trade with both, what you will find is that when you lock in profits on one contract, it will move the other one's stop loss automatically. So if you lock in at 112, it will move your stop loss to minus 112 so that you're basically at break even. And so you can give it more space and more room. And then obviously you can up your stop loss at any time during the trade. Any questions at this point, guys? I've gone through a lot of things very quickly, and I want to get to the point where we're gonna then practice it. But first, I want to make sure I explain it to you. Do we have questions?
Sorry, no questions.
Okay. So is everything making sense to, you know, is there something I missed that I should talk about?
You know what? If
I don't really look at the relative volume that much for trading, you know, futures. Like I say, it's more useful on individual stocks. What is more important is, you know, looking at the levels. You know, like this level, you can see how well it bounced off this level, and now it gets to the next level, and now it rejects it. Okay, so so trading the levels is more important. But you can see, like here, we had nice money flow. Now we don't. So now it's a much harder trade because you could bounce off this level or you could break down through it. I mean, we don't have a good sense of what's going to happen right now because you know it's not clear. Now this level, like it held, so that's good. So now it bounced with a big candle. So the problem is a lot of people will then chase that big candle and then get trapped. And that's, you can see that's exactly what happened here. So we bounced because I mean these levels are not, it's not a secret. I mean everyone can see on the chart why this is the level. So we see this level, okay. Then we say, okay, we could get a bounce there, okay, because that's where we saw buyer step up before. So as soon as we get a bounce, then people start chasing it because they don't want to miss out. Um, but then you immediately gets rejected here. So now these guys are trapped. Okay. Now, the other reason why, a long year is not good is because, you have the VWAP where you expect people to lock in a lot of profits. You have the 48 cloud. So, I mean, so these are all reasons why a long is very dangerous at this spot. Okay. Um, so I mean, so you could take a long year if you wanted to, but look at VIX. VIX is at the 48, so it could bounce here because VIX spent all morning above the 48. The probability that it's going to bounce here is much bigger, So I mean, it can literally go either direction right now. You just don't know. But for me right now, shorts are, more probable. And I'm just gonna take it to, this is not a good trade. This is not something I would recommend because, it's not a good setup. Okay, so even if it works, it's just would be pure luck because it's not a good setup. But I just want to like talk a little bit about trade management if it works out. So again, the first step is we want to get this guy, so the ticks, this is kind of what I think of as like the base. This is where you're gonna lock in your profits, and then the time frame, this is basically, your runner. So my setup is to take profits at $1,000. Now, obviously, that's a big number, so we could take that down. So we could take that down. Let's say we go down to, let's say, $200. And I mean, usually you want to look at the charts while you're trading, but because I'm screen sharing, I can only look at one of them at a time. We also have news coming up, so you see this countdown. So obviously, again, it's not a good time to get into a trade or be in a trade or anything. Um, I'm just trying to show you guys how to manage a trade. So if you say, okay, um, again, if you think that maybe it's not gonna go, you could say this $75, use this as my take profit, or use whatever this value is my take profit. Okay, but um, so if you say, okay, I wanna, if we get back to 100, I wanna lock in. So I click on that, and you can see immediately my stop loss here is moved to 100, and then the progress bar will show me when we get there. Now, because my stop was not above break even, it wasn't green. So now we have a risk-free trade. So this is where you want to get to, okay? Is you want to get to a point where your basic profits locked in, and now you have a runner, okay? And so with this runner, now you could decide how much space you want to give it. Now it's at your break even, your stop loss is at break even. So basically, you cannot lose money on this trade because you have $100 there already locked in, and then this one is at break even. And so now you can say, okay, we're at 250. So automatic stop loss management will happen, but you can also say turn that off, and now you're responsible for all of the stop loss management, and then you can turn it back on at any point. Okay. Now we're at $300, so we should probably look at the chart. But so we're at this level, so we could bounce again. But again, if we break this level, okay, if we break this level, we could dump really hard. So what did I tell you about VIX? Again, when VIX spent all morning above it, we get to the 48, the probability of bouncing is greater than not. Okay. So now, so the question, so we're at this level, so it could bounce again. So this is where you want to then, you can up your stop. So if you do up, it's going to go halfway between where you were and the current price. Okay. And again, if you're too aggressive on the stops, you're gonna miss out on any kind of major move. So that's why, it's called the runner, because we locked in some and now we have to, risk some. So it's like, so if we lock it in here, then we have that. And again, you can click on use and lock it in at that price. Um, or you could say, okay, I wanna, give it a chance because maybe it could dump and then, I'm gonna make way more. But you know, greed is very risky because that's a sure way to lose money. You can see, and we have news coming up, which is also, you know, not a good idea to be in a trade because that news could easily whiplash it way up and then stop you out, and then it can go down right after that. So I mean, because we have market moving news coming up in two, I'm just gonna say, look, let's just lock in right there. So we just locked in at 300. So we made, and obviously that first trade, I mean, we just randomly clicked on it. So we lost 500 there. But now we just made 100, 300, 4, 5. So I mean, so we're up. We're green for the day. And I just wanted to show you how to manage the trade, once you're in it. And that's how you can manage it, lock in some of the profits, then you keep the runner. And again, if we didn't have that news coming up, I definitely would have kept it because you can see VIX bouncing off the 48, which is what, very predictable. Again, you always want to watch VIX. And then, we we bounced. So again, I want to make sure you understand. So we expected a possible bounce here. Okay. Then we got it. People chased it. Okay. Then we rejected at the next level. So this is very bearish because we just trapped a bunch of bulls that chased this move. So once we got here, now we feel good about the move down. So you have to understand how people get trapped and hurt. And this is why, I took that put. But it was risky because we don't have clear indicators here in terms of money flow. We have news coming up,
Eva said market news, business raise.
but we had this trap. So this trap was the reason for taking that trade. It would have been nicer to have more confirmation there, and this probably will dump some more. But again, holding through market moving news is just not good practice. Okay. Any questions? Did that make sense, guys?
I like that's just listening along.
Cool. Yeah, so now, so here's the other thing. Okay. So we were in a good trade. We locked in profits. And I see this a lot. Now you're like, man, I should have held more. I should have held longer. Okay. So now FOMO kicks in. So what do? Now you're gonna chase this. Guess what? I promise you, as soon as you're gonna sit there and say, "No, I cannot FOMO because I know I'm gonna lose money." No, and then eventually you're like, "Okay, fine, I'm getting in." And guess
Eva
what?
said autopilot trade at B short.
As soon as you do that, you are going to lose. Okay. So now, if you, so don't chase it. Now, if you want to get in, like I say, you want to get in close to the alpha zone because you'll see. I mean, look at the prices. So we're here at 23.50. Alpha zone is 7 points higher. Okay. And I mean, look at any of these candles. So if you look at this candle. Okay, the bottom of it is 29, the top of it is at 35. So this candle right there is 5 points. 5 points, okay, is $250. Just like that. Okay. So you have to understand that when a candle can move basically $250 profit in one candle, um, it's really very easy to get stopped out and to lose money. Okay. So so by chasing this, you are sometimes gonna get lucky, but most of the time you're gonna lose. Okay. So now again, we get to the next stop here. Okay, sorry, the next level where it could bounce. Okay. Now, if you are gonna chase, um, as you can see, there's a bounce there. So if it can get to the alpha zone, so again, we're just like teaching the interface. So what you could do is here, is you could say, okay, I want to +2, so I want to get in a little bit sooner on the alpha zone, and then if I'm gonna take the a market entry, I'm gonna take -4. So I wanted to at least pull back for 1 point. Okay, so when I do that, um, at least I want to see a 1 point pullback before I get in. So that's better than just getting in at the current market level. And then, oh, so obviously now we're filled. Before you're filled, there's a pencil there. When you click on that, you can move your level where you get in. Now, because we're chasing it, this is again, this is very risky what we're doing here. So I'm just gonna like lock in. I'm gonna say when we get to that $50, I'm just gonna lock that in. So now the second one is at -50. So now, so I chased it a little bit. But I lock in profits very quickly, and now I have a runner which will probably stop out. Um, but like I'm like, okay, I'm just gonna take that. I'm done. Okay, so here we just did a quick scalp, and we just made $125. Now these guys I can cancel out, or I can just deflate there at the top, and then we'll get rid of all of that. If you click on close, it's like closing all of them together. Now these counters say this is how many ES contracts I have, and then how many orders. If they mismatch, if anything weird happens, you always want to click on flatten, because flatten's like, oh man, I don't know what happened. Just clean things out, close everything, because obviously if there's any kind of bug and you're in a contract and you don't know it, you could lose, a lot of money. So you don't want that. So it's really, really important that when you think you're out of a position and you see numbers here, you should always click on flatten. So that's super important, because if there's any kind of bug, um, nasty bug obviously, but if that happens, you could be in a contract and you won't see it here, but you'll see a number there and you're like +1 or -1. You're like, okay, okay, this is not good. Immediately slap that flatten button, because it's in there without a stop loss, and it's gonna keep going until you hit your daily loss limit on trade evade. So you definitely don't want that. Um, we we had that bug once a few weeks ago that we fixed. So I haven't seen it again, but it's still software, it's still computers. So again, always keep your eyes on these things. If you see that, immediately let me know, because if anything like that still can happen, I want to know so that we can track it down and fix it before we start trading live accounts. Did that quick scalp demo help you guys to see how you can protect your profits very quickly? So that, because again, it's like, just don't let it go red. Now, again, if you don't give enough space, you lock in at $75 instead of much bigger number. But it's hard for me to trade when I don't see the charts at the same time, and maybe I should open a second layer with the charts on it, but I don't want to get distracted. Okay, so let's look at this. Let's read this. So, okay, the chart here on the right hand side, this is the 15-minute chart. Okay, you can see we're at a level. Okay, this level, I believe, is also gap fill. So this is a very important level, and I probably should have marked it more as a must hold level. Must hold. Because if we don't hold this level, then we're going to see some serious downside move. Now, um, so you don't want to get into shorts here at the bottom, okay? Because again, you don't get bearish at the bottom, you don't get bullish at the top, okay? This is a very important level, which is also gap fill, so you don't want to get into shorts here. Now, if you're gonna get into shorts, you want to get in at the alpha zone, okay? So if you're gonna get in, again, you're gonna use, check this out. So let's take that up to 0. We're gonna short at the alpha zone, and actually, I want to keep it open for like maybe 4 minutes. Okay, so now we have, and I should add the timer on there as well. And actually, I don't want to risk 250. That's too much. So usually, I just have 250 as my initial thing. But then, as soon as I fill it in, I just say up. And now, um, if I'm gonna do, let me just. So if I do an up here, why is it not up? So okay, I gotta look at that. But so let's just go cancel that, and then move that to 10. And then shorted the alpha zone. Okay. Um, so now, I have something where I'm risking that much. So we look at this, and so now, so we missed that entry in all our playing around. But this is, if you look at this, you can see now. So we're below this must hold level. We have blue money flow, blue buying pressure. This is up. So there is no reason to get into any longs at this point. So now what you have to understand is um we have a confirmed trend down. Okay. What that means is that every bounce is being sold. Okay. So you can see this bounce wasn't a big one. But so now the mindset now is selling the bounces. Okay. And you have to understand. So this is not about catching the move. This is like what's the price action? The price action right now is a downtrend. So your job should be to short the bounces until it stops working. At some point it's going to stop working. Then the question is, where is a good place to short the bounce? Okay, so if we get back again to the alpha zone, which is there at 2175, that would be a good place. And so this is a little high. Let's see. So we want, yeah, so we want, and it will follow the alpha zone, but I'm not sure why it's so far off. So let's just, so that's 0. Um, let's just deflate those, and then we're gonna get back in. So oh man, sorry, I pressed the wrong button. I should probably make it so that it's harder to do. So this should be a little bit closer to 21. Yeah, so that's obviously a bug because it's 20. Oh, because it's the alpha zone on the previous candle, and it's moving so fast. Okay. anyway, so we're in this move, so we're gonna like want to lock in some of those profits so that we're not at risk. Then we're gonna take this up to break even. My internet is not very happy. It's just okay. So we're at break even. So we got in on that move. Okay. So the most important thing is to immediately lock in some profits and then make sure that your runner is not going to lose you money. And you can see how we've successfully done that now multiple times. But again, it could bounce at any point in time. Now, again, so my alpha zone calculations are a little delayed because this thing is moving so fast. It's always on the previous candle. One is not locked in yet. So if you want to cope with that, so you can go in and you can say get in at the alpha zone, and then you can say, okay, I want to get down a little bit there. So you could use the chase button to just move down a little bit more, and then or you could just click on it and just manually make it, whatever you want, and then you're gonna get filled there. We get, but yes, but I mean, don't be too aggressive because yes, that one moves by 2 ticks until you get filled. And the way it works is so when you press this, just watch your limit price there. So I press it, it goes. So every second, it drops it by a tick. Okay, so you can see it's like so it's a slow move down one, and then there's down. So it's a slow move down. So that's a better way to chase a price. So if you have to chase a price, and obviously we're in short, so it's going to move it down. When you're in longs, it's going to move it up. Like I'm not even looking at the charts right now because I'm teaching the interface here, but you can see that it waits a second before it changes it again. Wow, how much did it drop? We're at okay, so we're close to. So it shouldn't take. And you can press it multiple times, and then it's gonna get you filled there. Okay, so now we're filled. And again, we're chasing, so it's not something you should be doing. Um, but I'm just trying to like teach you like the interface. And then again, it's like so if I'm gonna use that value as my lock in, and again, if you miss it, you could lose money very quickly. But um, so if you can get some profits, locked in, and now obviously if you feel like okay this trade is not going to work, I mean you can just close it out. You can uh, lock in at you can move your take profit and your stop loss. I mean so you can don't stay in a trade that's not working because you're just going to end up losing way more than what you should. Okay, and you can see when you chase it like we did there, your chance of it not working is so much bigger. Okay, so that's why I'm not a big fan of chasing. Now this is still saying down, everything's still saying down, but I mean so you don't want to long it, but you want to get a good short entry. So if I look at this, the better move will be short there at the alpha zone. um and like if you get in because it's a little delayed, you can chase it a little bit from the alpha zone, but not too much. And if you want to get in at the current price, you can always do like an early entry of -2 or -4, and that will get you um closer to it, so it's going to want a little bit of a pullback. You can see that that works better than just straight getting in at so I'm going to say lock in at $37 because we're chasing, and so that's locked in. So this one now goes to negative that, and now we're going to say, okay, give me, I want to take it at $100. So we're going to hit $100 and we'll be locked in. I want to, and you can up your stop loss too, so we moved the take profit. So there we go. So a quick scalp there. And you can see how this interface just makes it really easy to scalp and lock those in. But the most important thing is you cannot chase it too much. And now obviously we're making full money here along the way, where if we could just get in here close to, like if we went in at the alpha zone there, 59.18, that's just, we would still be in. So you're gonna make, if you get a better entry and you give it some breathing room, you're gonna do much better. Okay. So now again, you see this, do not get into longs. Do not say, okay. And again, this is not financial advice. You do what you want to do. Okay. Um, but we're below the downtrend cloud. We have blue money flow. We have blue buying pressure. The VIX, look how beautiful this alpha zone is formed. It's beautiful, beautiful alpha zone here. There's no interaction with the alpha zone. You can see like there's a little poke there, but on the VIX, there's no, so I mean, so the alpha zone is clear. There's no interaction. So I mean, all of this is saying down. Now, if we go, so if we go to this chart, we could go even to the 4 hour. So you can see, and I'm just gonna remove the lines. Okay, so if you look at this, okay, so this is now ES 1 hour. So you want to look left. Okay, so you look at this and you say, okay, here there was buyer stepping up. So there's a possibility that we could bounce here. Okay, like right here or right there. So this is a range where we could bounce. So now it's a little bit risky to get in short. If we keep going through, we're probably gonna start thinking about bouncing there. This might be a little bit choppy when we get through this area. But if we get below here, we're just gonna keep going, and then the next resistance is gonna be there. So if we turn this back on, you can see my target that I put on the morning plan was, pretty much down here, 5,900. Okay. Um, and we're just like cutting through these things like butter. Again, so everything's still, so okay. So now you can see VIX is starting to go sideways. Okay. So VIX, this says the VIXI indicator. So blue is down, yellow's up. Okay. But now, so this is my first warning sign that I see. Okay. VIX going sideways. So we had beautiful yellow candles. So now we have sideways. So now I'm like, okay, this is not a good time to get in. Okay, because this is my first flag saying we could bounce here. Okay, we're at a level. Okay, it doesn't mean it's gonna bounce, but you you don't want to ignore warning flags. So you can see here blue candle. So this is saying we might be turning here. Now, I am not gonna go long because we have blue money flow, we have blue buying pressure. Okay. So so I am just looking for shorts still at this point. So if I'm gonna do anything, it's gonna be a short because that's what it tells me to do. Okay. But I also see a warning flag that I shouldn't be ignoring. Okay. Does that make sense, guys? So you look at so I guess I haven't looked at market tide in forever, but I guess it's not working anymore. So I'll have to take a look at that. But yeah, so everything's saying down. Okay. Now the other thing that I didn't do a good job at is also understand what Mancini is saying. I mean, this guy has a ton of experience. So read what he says and understand it. Okay. So he says bears are in control. Okay. Balances will be sold. Okay, that's what we also said. Okay. Until resistances recover. Okay. So unless we break above levels, unless we get yellow money flow, you should not lose a dollar on longs today. If you take longs, you're doing something wrong. Can you get lucky? Absolutely. But your focus should be on, selling or shorting the bounces when you're in a downtrend. Okay, you have to understand that. Your mindset should be this is what I'm looking for. I'm not looking for longs. And then you won't be chasing these things. Okay. Um, so again, this is a little bit of a warning flag, but it's going sideways. But if you're gonna risk any money, you want to do it on the short side because we have blue money flow, we blue buying pressure. Um, we're in a confirmed downtrend. Every bounce has been sold. We're not even touching the alpha zone, and that's why getting in close to the alpha zone is really the way to go. So if you get in at 5913 around there, that's a good price. Um, okay, so VIX is resuming this uptrend here. So you can see this is why you shouldn't be looking at those longs. So let's keep. I'm just gonna put now because we want to get in at the alpha zone. I'm just gonna and it moves so fast. I'm say 4 points before it. So now it's 5913.75. 5913.75. So basically, we'll get into short at that point. So basically, we're saying we want to go short, but we're not chasing it. Okay. If we don't get in, we don't get in. Okay. So okay. For today, that level. So basically, so he's saying for us for any hope of an upside move, he's saying we need to get back to 59.58. So when you look at this 59.58, wow. So he's saying we need to get above his pivot level. So we're so far away. Now, obviously, you can make good money between here and there. Um, but you should see yellow money flow and buying pressure, picks, and everything else that will guide you up there until you get there. So now, I mean, at this point, you shouldn't be chasing it. You could say, okay, so we want to get in close to the alpha zone. If you're like, well, this is, it's going to take too long, give it a C2 once over, but not too many times because every time you hit it, you're getting a worse and worse entry. And that's not the idea. So now we're at 1325. So if we get to 1325, so if we get there, we'll get in. And as the alpha zone move, it will update that entry. So you can just let it sit there. And if you have a sudden bounce, you'll get in. And if you don't get in, you don't get in. But again, if you get in, like if you got in here on this candle at 59.11 and it bounced to 59.18, that's 7 points. I mean, so you would have been stopped out. This is what you have to understand is you cannot chase the move. You will get stopped out. Okay. Now you want a decent stop loss, so you give it room. But if you don't get in at the alpha zone, chances of getting stopped out is just so big. Like instead of getting in here, if you just patiently waited for the alpha zone and get in here, and like I say, you can like do a little bit of a chase below it so that you're not right on the alpha zone, but you really, 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 really want to consider waiting for that price to touch the alpha zone before you get in. And you can constantly watch it. It's like so now it's
Trade at BP short.
so now it's at 59.1150. So if you look at your right here at 12, so maybe we could chase it just a little bit more so it's closer, or one more so we have just a little, so you could just like, so now we're at 59.11 on this one. So if we look at that, so to get in, we'll get in if price comes back there. But so we're trying to figure out what's a good place to get in so we don't get stopped out with a wick like this. Okay. And sometimes you have to give it bigger stops, but really find that entry and then just wait. Don't chase it. It rarely works. Again, so Wix here, a little bit sideways. So again, it's a little bit of a warning action, warning flag. Uh, we're probably getting in now. Again, it could bounce here. Okay, so we're in. We're at $75. So I click on use so that when we get to 75, next time we're gonna get locked in. But we might have missed it because we didn't look at it, but that's okay. You can see that price is moving very fast here. So uh it's so we could say, okay, maybe we want to lock in at $50. Just so we're safe. So we moved that to $50. We're locked in. The second one now goes to minus 50, and now it opted to 0. So now we have a safe trade. So now, I mean, we made plenty of money today. So now we can just give it room and see what happens. Now, so if you up your stop, you're gonna keep more, but you could also move out on a trade. So this is the tough one. Do I lock in that 150, or there we stopped out at 0? And that's sometimes okay. This guy got locked in now. So I'm gonna just take my profits there at. So like if you're nervous, you're like, okay, because I'm not able to look at the chart. Okay. So that one got in at the alpha zone and locked it in. But again, we're making small monies here because we're not letting it run. And to have it run, you have to give it more room. And many times what I have to do there is I just have to disable the automatic stop loss management, because this one, when it locked in at 50, it took this one to minus 50, but then the automatic stop loss moved it up. So if you turn it off, then it will stay at minus 50, and then you give it way more room to work. And if it doesn't work, then you break even. So that's fine. But let's see if we can do a trade with automatic stop loss management off. So let's see where we are now. So okay, so VIX, I mean, it's still very high, but it is all about the momentum and the direction. Oh, good money. So we're just gonna put in another trade at the alpha zone, so 59.11. So we're gonna go and say short at the alpha zone, and so that's good. That's a good price for the alpha zone. And now, and you can see how much it moves. Like this candle, 906 to 911. I mean, that's 5 points. That's $250 right there. I mean, it's like you have to get a good entry. I mean, otherwise, I don't know how you can make it work. So chasing it is just, I mean, you lose so much money so quickly, especially if you trade multiple contracts. I mean, there's no reason to trade more than this. Now, if it works, you can add to it, and I'll make the interface a little bit easier to add to trades. But at this point, you're just sitting and waiting. We're at 1075. So now we just wait for that bounce, and if we don't get in, we don't get in, and that's fine. Okay. Any any comments while we wait for an entry?
Uh, just to get really good.
No, appreciate it. Yeah, and I mean, usually, you would stay in longer because, we're breaking through a level, and then you're like, okay, I'm gonna turn off automatic stop loss management to give it more breathing room, especially like if you're up. I mean, I'm not sure how much we're up for the day here on, so we're up $1,000 already today. Um, I mean, so I do a lot of, you know, weird trades in my demo account because, I'm testing the software. So, but yeah, so just for today, we're up at $1,000. So I mean, so we have room to get a little bit more risky. Okay. So if we feel like the movie's still on, we could give it more space. So, and if it doesn't work out, we're still green for the day. But you have to risk money to make money. It's not like you can take zero risk. Anyone else want to comment while we wait to see if we get an entry? Is this helpful to everyone else too?
Yes, Fred.
Yeah, and then I mean, so other than this, the next thing is to wait for a turn. But I mean, sometimes it takes a little bit of time to spot the turn. But I mean, like I say, right now we have blue money flow, we have blue buying pressure, VIX is still on fire, so we shouldn't be looking um for longs. They were still not in there. Again, we don't need to chase it because if we do, we can get stopped out very quickly. So I'm just gonna watch this. I mean, okay, so here we're in, again, so now, you want to watch the chart at the same time. I'm probably gonna take this so we lock in, let's say, at $100, get there, and we can watch the chart. So we're at this level. So if we reject it, that might be a nice play to the downside. VIX is still hot. It's still looking good. We see that the buying pressure is losing, is fading a little bit. So yeah, so then again. Okay, so we're already locked in at $100. So this one now I'm going to turn off automatic stop loss, and I'm going to take this and I'm going to make this minus 100. Did that work? No. Okay. Yeah, I have to fix that. It won't let the stop loss go the other direction. So we might still get stopped out at 0, but I'm hoping it's gonna give us a little bit more. So now, so I turn off automatic stop loss. So now it won't move the stop loss. Okay. It will stay here. And so I might lose everything. So now it's my job to go and lock it in. So I'm like, okay, that's a nice move. Then I'm gonna say I'm gonna up it. So now I want to keep $112 of that. and then I'm like, okay, I'm gonna let you take over again. So at any point in time, I can just turn it back on, and now it's gonna resume the stop loss management. Okay. So there we go. Because again, we're not looking for longs. Okay, we were not looking for longs because everything tells us to look for shorts, and we want to get in close to the alpha zone. Where we get here, I mean, so at this point, that's 325. You know, I mean, at any point in time, you can now just say, look, I want to use my, let's say, I want to move my stop here to $300. Keep that much. And then, you know, if it keeps going up, then great. I mean, this is too tight. So we're probably going to get stopped out and we're going to miss out on a big move down. So I don't recommend that because, but again, if you want to make sure you keep at least that money, that's how you do it. Okay. Um, but yeah, so we just got stopped out. And again, so now we're up, you know, $1,500 for the day, which, you know, not too shabby for, you know, little back and forth trading. Any question? Chris, I know you said last time we're on here, you're gonna talk about things that you see that helps you. Do you have a mic? Do you have time? Do you want to do some of that? And then anyone else that wanna like contribute, talk about their experiences, etc.
I'll just mention that the, having, I think I mentioned it in chat, but chart is profit trade using the orb, and a lot of times I take maybe take a trade. So
Yeah, so an open range, let's talk a little bit about that. So you could do an open range of any time frame. It can be 15 minutes, 30 minutes, it could even be 5 minutes. So the idea is you look at the first 5 minutes or 15 minutes, 30 minutes of the day, regular trading hours, and then you look at the high and the low of that. So if you just go to a 5 minute candle, so if you have a 30 minute, and we'll just well, let's just do it on this chart. So if we go here to 30-minute candles, then basically your first candle of the day from 9. So this would be your open range high would be there, open range low would be there if you use a 30-minute open. Um, Now the idea is that if you stay within that range, there's no trade, but if you break below it, then you're short. When you break above it, you go long. Now if you go to 5 minute candle, so we open, so there's 9:30. So if this is your open range, then obviously um you could see, and sometimes, you know, I kind of like the 5 minute one because like, and you can use multiples obviously, but like if you look at your first 5 minute candle, like if you cannot break above it, then you know you cannot go up if you cannot break above your 5 minute candle. You cannot go down unless you break below your first 5 minute. And but yeah, so you can use 30 minutes. Some people use an hour initial balance, but that's a little slow for me. But yeah, so that's basically the idea. But the most important thing too that I use is really um looking at the pre-market's high and low. So when you look at the indicator, this blue line and this one, this is the pre-market high and the pre-market low, and pre-market for me starts at 4 a.m. So overnight is way up there, but pre-market, when more people markets are involved and engaged, this gives you a good idea. So so you'll see many times my my arrows will only start above the pre-market high and below the pre-market low. Because if you cannot break out of it, then you're not going up. If you cannot break below it, you're not going down. So the pre-market levels are like the number one thing you should consider using, for direction. And then like Sparrow says, the open range. And I think you use a 30-minute open range if I remember right. So let's see. Um so now the question, so I'm not gonna take, a bunch of trades here again, because I mean, you know how to do this now. So now I want to look at, how do you spot a reversal? And we may not get that at all. So this might be a hypothetical discussion, but an important one to have. So so now so again, this is all I'm looking at all day long. The 2-minute chart, he has fixed 2 minutes, and then 15-minute ES on this side. And this is very important. It's very important to constantly watch this, because when you look at this, again, you could see we're below my pivot level, the morning plan. Okay. So we know that's short. Okay. So that's easy. We see that we tried to poke above it here and then drop down. This was pre-market already. Okay. And I mean, what time did I post this plan this morning? I mean, so it's like, take a quick look. Morning plan. What time did I post it? 4:20 a.m. So already at 4:20 a.m., this is the plan I gave you guys. So at 4:20 a.m., what's it saying? So at 4:20 a.m., this is where we were, right here. Okay. And already then I gave you this plan, and I could have given you this plan, even yesterday. No, well, we had a big drop, so no, it wouldn't. Wouldn't have worked. Okay. But many times I do. But you can see right here, it was clear that this was the level we had to break to go up, and if we don't, we're gonna short it. Okay. So look at the morning plan. Now again, look at this. We always say who's feeling pain. So right here, we have a nice bounce here. We have bulls chasing it, and then they lose, and then they start stopping out. Stop. So now you're here, who's in pain? Bulls, who's winning? So you can see here that at this point, who's feeling good? The Bears. Okay. So as long as the Bears feel good, there's absolutely no reason to go long. Okay. And you can see, I bet you many of you will say, okay, we cannot go any lower. This looks like we're turning. And I bet you many of you want to just hit that long button right now and saying, I'm going to catch it here at the bottom. And you're going to, now if you scalp it, you could make, a couple of bucks. But this is not how you become profitable. You have to look at everything here and wait for it to tell you that there's a turn. Because like right now, if you look at this 15-minute chart, you can see this long wick at the bottom. Okay. So now if it keeps going up, this could become a nice bear trap. We're at a nice level. We're at 5,900, which is a big psychological level. So this would be a very good spot to form a bear trap. Now, a better bear trap would be one that goes at below 5,900, because we know there's a lot of stops below 5,900. Okay. And so if we could break below it, take out the stops and go out up, it would be much stronger. But this is a great spot for a turn. Okay. Now, the easiest way, again, to see turns is to look at the 15-minute chart because you can see the long wick, you can see the green candle. On the 2-minute, it's very hard to spot because you have tunnel vision. You only see this. So this is too hard to spot a turn. But look at the 15-minute, and you can see that it looks promising. Okay, now I won't take it because it's risky, but again, this is a very good level, 5,900 for a turn. You can see VIX doing this. You can see this. Now, it's not a great trade, but I'm just going to take it because, I mean, this is a good spot where you could turn. Now, if you want to take it here, okay, you have to know that it's going to be choppy. So you want your entry closer down there. So I'm going to go, if I'm going to take it, I'm going to say early entry. I'm going to say -4. And then I'm going to go and say, I want to counter trend trade by unlocking it. And then I'm just going to say, I'm going to go long. And so now you can see my order count is 2, and now I'm filled. Okay. So now obviously, so we're taking a lower probability trade. So I got to lock in as quickly as possible. And then I'm going to turn that off. Okay. So now I'm risking, so I locked in $62. I'm willing to lose all of that because if this is a turn, this might be very profitable. Okay. And if not, then, I'm break even. Um, Now, if it was all about the money, I definitely would have locked in both of them. But again, um, if it's a turn, you could make money. But again, it's still blue money flow. Everything's still, that's saying we're still going down. We have blue buying pressure. Um, See this yellow line on VIX? So we had a blue candle, but now VIX is up again. And again, the best entry for a turn is, like I say, is to get in your close at 5,900. Um, so this is not a great entry, but by doing a -4, basically we got in there -4, so that's why we got in lower. So if you're gonna chase it with a market order, use a -4 or something, just something so that you get in on a little bit of a pullback. But again, getting it at the alpha zone is better. But right now, because we're turning, the alpha zone doesn't make a lot of sense if you want to catch that counter trend move. Okay. So we're still in, we're up $125. Um, again, I mean, I could lock it in now because that's real money. Or if I look at this, it's like, do I think this is gonna happen? I mean, VIX is bouncing. That's like it's hard to say, but it's like if here's the point. Like if you risk the money to try and catch this move, okay, and now you're in it, you locked in some profits. Now, you wanna give it the chance it deserves because otherwise why risk money? If so this is probably gonna stop out at break at -$62, which will make the whole trade break even. But I mean, we risked money to get into this possible trend change trade. So I'm gonna give it a shot and see what happens. Okay. Now I'm gonna watch this. And again, it can come down here all the way before it bounces. Like the better bounce would be if it pokes through 5,900 before. But like I said, I'm just giving this a chance. We already made $1,500 today, so it's a demo count, so it's not real money, but still. So this is still bouncing up and down. Like I say, it's not looking very promising because again, we have blue money flow. We have VIX. We got some blue candles, but we're back up again. Um, Look at that. Now, on a big candle, it's a good idea to lock in some profit. So I'm just going to close it out for $325. Because again, my rule is big candle lock in profits. Okay. So we just locked in $325 on that big candle. Now it could keep going, but the problem with big candles is it's a lot of people that chase it because they're like, okay, it looks like a turn. And then many times they get trapped and go down. So I'm happy to just walk away with it $300 and it's okay because it could keep going. Now, if I had multiple contracts, obviously that would be nicer. But big candles shouldn't be trusted. It could keep going up, but I locked in $300 plus 60 up, so I'm happy. But again, big candle, I don't trust it. I This is likely gonna come down first before it will go up. No one knows. Market does what you want. Any questions? Any feedback? Comments? I mean, so that's a great question. Obviously, I mean, I want to go live just as badly as everyone else, but it's because we're working with real money. I want to make sure that we get a couple of days of good profits on the demo account. I mean, the fact is that you know when it works, it's gonna keep working, and it's gonna keep accumulating money. But the beginning is always the most risky. I don't want to turn it on until I feel that like we're gonna make money, and there's no guarantees. But I mean, the risk is just not worth it because once we have some good, we look at daily results from the demo account and we see day after day of good results. We can turn it on and we can know that we're gonna make, well, likely make money on the real account, and then it will just keep growing. So I don't, I want to make sure I see more good, consistent results on the demo account. I mean, like the last couple of days, the demo account did good, but and it did really well a few weeks ago. But then I made some changes, and then it was horrible, and then it's better again. But so I really want to get through just making sure everything's clean up. I mean, I've done a lot of cleaning up of core things. I'm adding features, and so I want to make sure all the breaking changes are gone because once we release it and it makes money, we're gonna just see so many signups, and then it's gonna be impossible to make any other changes. So I don't have a good answer for you, but I really want to see everyone posting consistent good results on the demo account, for a couple of days, and then we'll open it up, and we'll have a good strategy for limiting it to micros, and then when your profit gets above a certain amount, then we'll go up to minis, and that way we'll keep it as safe as we can, from a software perspective. Does that make sense? Sure. Okay, so guys, this is a great example why I locked in profits on that big candle. If I didn't, I would be stopping out right now. So again, because again, we know that longs is counter trend. Yes, it's at a spot where it's a good spot for turn, but we don't have enough confirmation yet. I mean, so you can see VIX. And the only reason why VIX is doing this dance is because people expect a bounce here. Okay. But again, it's a low probability unless I could see money flow aggressively change. I'm starting to see yellow money flow. Um, it's not a done deal yet, so this would have been a great short. Um, But again, it's easy in hindsight to say that. But the longs are risky because there's no confirmation. So the plan should always be to sell bounces, short them until it stops working. And you can see it's still working. But again, this is still a good spot for a turn. So my target from the morning plan was around here. Maybe that's a little low, but that's my target is 58.86. Uh, so so that might be a very good spot for a turn. But around this area, this is now becoming risky um, to get into new shorts because again, we're at a good spot for a turn. And it's longs are risky because it's counter trend. We have a good firm downtrend. Plus, it's Friday, so I mean, it won't be, won't be uncommon to see a turn here. So I'm gonna hang on a little bit longer and see if we could catch a turn here. I'm not gonna take any more trades here today. I think we've done enough profitable trades here today that you have a pretty good idea how to use the tools. And then obviously with autopilot, taking trades and managing the stop losses, that is the ultimate goal. So you don't have to do this. And then over time, it will get better progressively. Chris, are you back? Hey, Alice, I see you're here. Did you want to say something? Did you catch it from the beginning? Okay, so you guys can see money flow still blue. We're seeing that triangle forming there. VIX is still hot. So you shouldn't be taking any longs. Uh, it's it's a dangerous spot to get into new shorts. Now, if you held your runners from the top, obviously making a lot of money right now. But we'll see. Get a little bit of a balance. And now, for a good bear trap again, we want to poke through 5,900, which we did here. But you know, we want to see more of an impulsive move. Um, I mean, the more impulsive the move is, the better it is. Because if you get an impulsive move down, and bears chasing it, then it turns impulsively, then um, that's a better trap. This guy, you remember how impulsive this candle was? Or no, was it this candle? Um, I mean, I locked in my profits way here at the top because it was a big candle and it was impulsive, but there was nothing impulsive going down. So it felt more like a trap to the upside. Okay. So for a bear trap, I like to see an impulsive move down first, followed by an impulsive move up. And there was no impulsive move down. It was just an impulsive move up. So that's one of the reasons I locked it in. Like I say, also in a big candle it's good to lock in because you cannot trust them, but that clearly was a bull trap. And because you have a bull trap there, it makes the downside you know more probable. So that's why I expect a little bit more downside here. My morning plan level for the turn is around 58.86. If we get an impulsive move now down close to the level and turn, that would a good long trade then, because you'll probably see money flow kick in very quickly, vertical line. But you want that confirmation. You want VIX to give you consistent blue candles. You want to see the alpha zone changes. Okay, we'll give it a couple more minutes, then I'm gonna hang up and let you guys go. And then I'm gonna upload this recording and hopefully help. Any final comments?